Good morning and happy Monday, everyone. Welcome back to the Schwab YouTube coaching channel. It's the Trader Talk in today's market, and I'm your host, Kevin Horner, joining you from a sunny and beautiful Denver, Colorado. Today, joined by my friend, Mr. Michael Bruskoff. Hey, Mike, it's great to see you again, buddy. How you doing?
Hey, good morning, Kevin. How are you doing? Doing well out here on the East Coast.
Good. Well, I know your Eagles got another victory yesterday, still carrying the mantle of a Super Bowl champion as undefeated. Congrats to you. Until you meet up with my Broncos next week, we will let that move to the sideline as we talk market today. But I just had to get my dig in there. As our teams will be meeting up next week. That should be entertaining. Today, everyone, as usual, we're going to review the setup of the market for the week. We're going to take a look at a bunch of charts, as we often do in this chat, of course, and hit you up with a bunch of the news headlines that you need to be paying attention to as it relates to the market. So thanks for being here, everyone. Say hi to Mike Fairborn in the chat. He'll make sure that all of you stay in line, of course. Make sure to be following Mike and me on X if you're not already doing so. Mike Fairborn, CS, and Kevin Horner, CS. The best way to engage with your coaches aside of the classes we offer you here on YouTube is on X. So please follow us there. Make sure you reach out, say hi, etc. Okay, let's get to those disclosures, and then we will jump right on into things. So please remember that our discussions here are exclusively informational and educational. We do not make recommendations nor endorsements for a specific method to trading the market. We will talk technical analysis, of course, in this conversation. In doing so, we really just bringing to light concepts and strategies traders might choose to employ in their trading processes. Now, it's important to remember we work in a demonstration mode of Thinkorswim as well. So bear that in mind as you're working through things with us. Last note, just remember not to base all of your decisions off of exclusively technical analysis. As we often say, the process of trading requires a multitude of factors when making our decisions, and we encourage you to balance those as you make yours. Now, in terms of an agenda, it is a lot of the same for many of you who are here frequently. So we'll work through our top-down methodology, hitting up the large cap index, the small cap index, the Russell that being the Russell 2000, the NASDAQ 100 as well. And then we just work our way through sectors and stocks in the news. And so let's get right to it. See how we have a little bit of bullishness yet again, Mike, as we bounce once more off that 20-day moving average in the SPX.
Yeah, Kevin, listen, it's we'll call it a good morning, right? You know, nobody's going to complain when the market's going up, but I do think we've got a lot of things on our plate. So maybe we'll look at it, maybe not through the greenest shade that the market is giving us today. You know, we have a pending government shutdown, 12 p.m. East Coast time tomorrow night. That could be a little fun for the market. Typically not much of a market moving event. We've got a jobs report coming out later on this week, giving us an indication potentially how the labor market is doing and how that might affect future interest rates. And we had a little bit of sticky inflation at the end of last week, putting maybe a little bit of I don't want to say a cloud over interest rates, because it looks like there's still about a 90% chance that interest rates might potentially go down later on next month. But a strong PCE number last Friday kind of had me scratching my head a little bit, but I'd love to hear your thoughts, and that's why it's a Monday morning, Kevin.
Honestly, Mike, my thoughts are a lot of the same. The reminder that I am brought to once again is that we cannot fight against what is happening in the market. That's easier said than done. You know, we traders, we formulate ideas and opinions, and then we try to trade against those. Well, if you were expecting a bit of a breakdown last week, you've been kind of denied. I mean, we had a bit of a doji candle there, Mike, that bounced right on the 20-day. And then Friday, you got to close above the high of the low day. So if this is, in fact, that briefest of 3-day moves, Mike, pulling back to the 20-day moving average yet again, many traders would tell you that they're going to continue to trade based on hold tests of 20-day moving averages, maybe a pullback to a 50-day. But, you know, I think a lot of traders were misled last week thinking that we were going to be seeing that deeper withdrawal, and we just haven't seen it as of yet. The headlines remain. The headlines are still relatively pessimistic as it relates to the market. And Mike, I cannot get away from that idiom about the market climbing a wall of worry. There is enough worry to be gripping onto that if you think that you're simply running with what's happening and that it's going to be a clear sail, it's not going to be clear sailing. But I'll tell you what, you'd be hard pressed to deny what we're seeing in terms of price action.
You know, Kevin, you and I have done these shows for a long time. We think back to the days when the market's in a rut, when it's going down every day, and we're always looking for some kind of glimmer of hope, right? Hey, where's the next green shoot, Kevin? I need something to be positive on. And now you and I sound like two old men that we're so worried about the market going down, but it's not going down and it's climbing your wall of worry. So the only things that we can do are kind of, as a trader, we have to obviously have a risk management strategy in place, right? Something goes wrong. That's why we have that risk management. But I also don't fight the Fed. I think I've heard that. You like those sayings.
Yeah.
Don't fight the Fed. And right now, there's still, even with a 0.25% rate cut earlier this month, there's still on the table another potential cut next month. Tomorrow, later on in October, right? So at that point, that's what the market's looking forward to, and it seems to be ignoring some yellow flashing lights as it's going through these spots, right? So that the yellow flashing lights are what me and you are concerned about, but maybe we're missing the boat, Kevin. I don't know, but that's why we talk about all these things, because we want to make sure that we're hitting the things that are important and not missing anything. But at the end of the day, as a trader, I don't know that we want to fight the trend that the market is going, and that's the way I would look at it.
I think that makes a lot of sense for many of us traders. And I'll remind you, as I often do, everyone, that we individually as traders should always be trading to our comfort levels. So if you're of the belief that what we're seeing is going to continue to happen, and as again, we have evidence, at least in the very short term, that what's been happening might very well continue to be happening here. So, trade to your comfort level. If you feel the need to build cash, maintain liquidity as best you can, and just simply roll with it as best you can as well. But have that plan and try to stick to it regardless. I think that's a big, important aspect. Now, Mike, one other thing is I'm going to shift over to the NASDAQ 100. You mentioned the potential looming government shutdown. One of the comments that we should be aware of, or one of the things that we might expect, when we get these government shutdowns, if they occur, typically that locks up government decision making, of course. So no changes to policy, no changes to from the Congress side of things. There's not likely to be a whole lot that happens. Now, if that's the case, well, then the market kind of likes it, right? It likes this gridlocked idea because nothing changes. It makes things a little bit more understandable. That stated, one thing that could happen here, Mike, is we might see a delay in detailed data coming out because of the government shutdown. So if we have less data to work from and a Fed that has stated that they are data dependent on all decision making, it could be problematic for us. That's one thing we should be at least aware of. No,
awesome point of view. Yeah, why not? Right? If we're so worried about, I just mentioned it, the jobs report that's coming out on Friday, right? If that jobs report doesn't come out on Friday because the government is shut down, air parentheses, if it's shut down because of a disagreement between the Republicans and Democrats in getting a budget approval, if that's the case, that would be something that would probably be concerning to the market. Which, as you and I were joking around before we started, why were the futures up so much today, right? Are we the only two people that see those things that could be concerning for the market? I don't think so, Kevin.
I don't either, and yet here we are with the NASDAQ gapping upward today. I mean, the price action move once more, Mike, is giving us signals that things are healthier than some of us even think. And so we're going to pay attention once more to what's happening and not fight against it. So what do we have today? But Friday, a cold move, with Thursday being the low of the pullback. And then you've got a breakout today through the downtrend line. And many traders would tell you that just resembles a fairly quick bull flag breakout once more, Mike. So we're going to try once again not to fight against what we are seeing and trade just what we are seeing rather than what we maybe think we ought to be seeing, Mike. One other quick note here, as I'm just peeking over, I see that the VIX is elevating a bit here today. So we're up about 4.5% on the VIX. Doesn't make a big change in regard to the levels at this point, but it bears watching because I think what it says is there is a little bit of concern as it relates to the potential for a shutdown here, Mike.
There is, but I would think, we dropped 8% on the VIX on Friday. We're up 4% on the VIX today. It just doesn't feel like that, the market's considering any part of the shutdown a problematic, right? And that's the only thing that I could say, right? And typically, over the last few years, government shutdowns, the last real shutdown, was probably over 15 years ago. I believe I was reading, don't hold me to the date, Kevin, 2013, 2003. I can't remember which one of those I read this morning when I was looking at when there was the last official shutdown. It was very early in the morning. But typically, even when they have these 1 or 2 day ones, the market doesn't, have a panic sell-off or anything like that. That's not usually what's in the cards when this happens. But this does seem a little edgy. The president's, pretty vocal. Hey, we'll have some mass layoffs if we do indeed shut down the government. That's a little different rhetoric than maybe we've heard in previous scenarios of this, whether it's a Republican president or Democratic president. It just matters right now. Hey, potentially we could have some layoffs. Okay. We're so data dependent. It's a big one this Friday where the market is pricing in continued interest rate cuts. Those are the things that me and you were concerned about.
Sure.
And then, hey, could the market potentially derail it? From a technical point, Kevin, when you're looking at the NDX, I mean, we're just off all-time highs. We're still strong on the 20-day moving average. You just pointed out that, a slight flag pattern, which would mean if we're breaking out where we are today, continued uptrend in the NDX, the Qs, whatever you want to call it. If you look down below, your RSI went from overbought to now fish hooking back above, looks like it's going to fish hook back above. That still could give us room to break out to another all-time high, even with all this, I'll say, gray, cloudy news that you and I are talking about. Kevin, let's get to something positive. Come on, man.
Yeah, well, what's not to be positive about? I mean, this looks like 0.5% from all-time highs. I hope we're not throwing too much cold water on what's happening here, but what are we looking for? Something different. Haven't had a whole lot different here, so we'll continue to monitor the same stuff. Everyone, watch that 20-day moving average, maybe the 50-day a little bit more importantly, because a break of the 50-day would be quite significant as it relates to the trend we've been in since early April. So, we've had one single 50-day test on the NDX here. So, a test there wouldn't be out of the realm of possibility. We're looking at about what it would amount to about a 4% drawdown if that were to occur. Again, everything in perspective makes a lot of sense. I think the rally on Friday, Mike, was tied heavily to that PCE number coming through, basically in line. Now, the commentary there is always tied to the PCE being really the Fed's preferred inflationary gauge. And since that was in line, the thought process, I guess, Mike, is that, well, inflation is taming a little bit. And that's positive as it relates to the overall market. But I think that's why we got the action we did on Friday. Today's move seems to be a little bit unclear to me, but we'll see how this plays out going forward a little bit. Mike, let's see how those small caps are doing here. We're pretty flat on the morning, but again, got a nice bounce on Friday with a hold move that filled the gap there. Mike, the issue on small caps commonly is of course tied to rates. So we've seen a continued move to the upside as the story around yields dropping and yield pulling back to levels that we prefer to see has been buoying small caps to a certain extent here. And we did have a recent breakout. So are we basically, Mike, watching the 20-day once more here? Looks like it's been pretty consistent for about 6 plus 8 weeks almost.
Listen, I think, Kevin, more intriguing, obviously, it's nice that the NASDAQ, it's nice that the S&P 500, within, 0.5% or so of all-time highs. It's nice to see where the Russell is. right? You know,
Mhm.
we hit a high. What was it? You know, sometime within the last 5 trading days, we almost hit an all-time high, and now it's kind of, if you look at it, we've got that, you know, a little bit of resistance now. Now that if I kind of look at that, right, you go back to last November, it looks like a matching high, right?
Yep.
And we didn't really blow through the area. You know, we had an interest rate cut, you know, a week and a half ago. You thought that would maybe kind of fuel these guys to new levels, right? Get outside that trading range that you have so conveniently already drawn, because we already knew where the trading range was. So
Yep.
for me, my eye focus right now would be, can these small caps really take leadership of the market, right? We've been talking about the Mag 7. Some of them, I don't want to say they're stumbling, but, you know, they have one good day, they have a bad day. They look
Sure.
like they're getting maybe tired, air parenthesis, maybe they're getting tired. And if that's the case, Kevin, where are we going to see some kind of leadership with the projection that we might get not one, but maybe 2 more cuts in the next couple of months from the Fed? I would like to see a little leadership from these guys. These guys have been doing really well. There's no complaints there. But I would probably like to see these guys break through that gray area that you just drew, kind of maybe take a little bit more of a leadership, broad-based, you know, broaden the rally in the market a little bit, which it has been. We've been seeing bigger breadth of other stocks other than those Mag 7s running. But this would be the group that I'm more optimistic, Kevin. That's where that's where my hopes are. And nobody's in the hope game in the stock market.
We should not be. Well, we don't mind having hope, but we don't want to trade on hope, I would suggest. So let's make sure that we are rules-based trading that doesn't apply hope to the process would be our thought. Yeah, I think you're right, Mike. I think what you're basically asking is, show me a breakout here. Give me a legitimate move to new highs by some measure that'll make traders feel a lot more confident from a technical perspective. This could easily be a resistance point. It's way too early to know. Now, the 20-day moving average having held since we gapped up in mid-August makes a lot of sense, right? That's 6 weeks, and now that's about a window of time that's pretty consistent with rallies and pullbacks and whatnot. So we'll see if the 20-day holds here. Less than the 20-day, maybe the 50-day comes into play. But really what we're looking for, can we get through that band that I drew in here on the daily chart? Because essentially that band is the same as this white line. So what we're looking for is a legitimate breakout, 2 new highs that would allow the small caps to provide leadership. And I think, Mike, the takeaway there, as you stated, essentially is leadership from small caps is positive overall in the broader market, can lead to really interesting growth opportunities from those companies that have fair bits of debt, might not be making a whole lot of money right now necessarily, but could be well positioned for growth in the future. So I should also point out here, everyone, we do have a survey opportunity in the chat. So you'll notice that link, just a few up from our most recent chats. Go ahead and click that link, everyone. It's going to open a browser window right next to this one. Don't fill it out now. Give us the time. Let's go through the rest of the session here, but you can get to it after the class and you can let us know your thoughts. Put a score in there. If you leave some comments, we always get those comments direct to us. It means a lot when you let us know what you're thinking. We'd love to hear those thoughts and try to incorporate them into our thought process moving forward here in Trader Talk. So I do try to take your insights and bring them right back to the table for you. So let us know what you're thinking about Trader Talk. Okay, Mike, we're getting a big move today out of the semis. Semis popping up 1.5%. You're going to have a hard time selling the market down if the semis are continuing to new highs once more here. Gap move that was last week here, or 2 weeks back and then we're gapping to another level today. It'd be really hard to see the semis not be providing the leadership for the overall market here. I don't know what else to say about a space like this. It's been incredibly strong.
Yeah, exactly what you just said, Kevin, right? Take this chart, though, and just go back to what we just said, small question on the small cap. See how this broke out of that area, right? And then it just continued to keep going, right? If you kind of put a high, right there.
There you go.
Thank you.
Right.
Yeah, as it kind of broke that area, then it kind of kept going. Same thing we were asking for the small caps. Now, let's come back to the semis. Listen, this has been this has been the strongest part of the market. There's no debate, right? It doesn't matter what day I'm not on your show, Kevin. This is the topic that's driving the market, right? So these stocks right now I'm looking down below on your chart. All right, RSI can stay overbought for a while. You got a gap up top today. Is this a blow-off gap, Kevin? Opening it up. Look at the gap that created on the chart today. For me, maybe a little bit of a spacing there. What's the continued run-up? Again, I get it, Mike. Don't miss the AI trade. What are you doing, Mike? You're sleeping all day. I get it. But there is a point where it gets tiresome, right, for these stocks. Not for me of following them, but the stocks get tired. And I don't know. And there is sometimes that pullback to that 20, right? Like we see it. We don't get too far above the 20. So it seems like we're reaching a little bit. We are in an extended overbought on your RSI on the bottom, your oscillator down there. It doesn't make me say, hey, I'm going to ignore it, but maybe I start to think about where my stops are, if I'm long these positions. Am I continuing to grow them? Am I adding to them? I think those are things that I don't know. But I would be a little more cautious up here in these levels, not expecting a correction, but a normal pullback a little bit, right? A couple of days where it gets choppy water, that might not be out of the realm. Pull back to the 20, right? Somewhere around there. That's what I would say.
And Mike, I think that a lot of traders are feeling kind of similarly, right? We've got evidence in terms of price action that validates strength here. So we're once more not overthinking it, but what would be kind of intriguing for the current trend here, Mike, would be if today's candle does not lead to new highs. Meaning if today's candle were all by itself, maybe we have a positive day all day today, but then quickly tomorrow, for example, we were back below the gap we made today, back into this range. That could be the kind of thing that would stand out on a chart. And again, we bring these concepts, these ideas of what might happen to the table as a reminder for us as traders that this is what we need to do. We need to be constantly thinking about the potential moves that could be coming in today, subsequent days, etc. What are things that would make me make a different decision versus what I'm doing right now? And sometimes those candles can be very instructive for us, even on a one-day basis. And a significant reversal, a single candle that leads to a gap move to the upside, and there's all this optimism. The reversal of such a move would be a heads up, right? And significant, so we'll pay attention. But obviously, the range we've just broken out of, a lot of traders, Mike, are going to tell you that they're now expecting, hey, this tight range, we can move that to the upside, right? 63.50 down to 61.25, so about 225 additional to the upside from 63.5, something like that.
From a technical analysis point of view, Kevin, I kind of actually agree with it. Right? Yeah. We're still early in the trading day. It's 23 minutes into the trading day right now. So let's see. Let's see how that candle looks. If it looks red at the end of the day, I don't want to say that I was right. That's not what this is about. But I would just feel, I feel it's a little ahead of itself right now. I understand that breakout that people would point to me. There's no ifs, ands, or buts. You just had a breakout a couple of weeks ago. Right. When you broke out from that lower level. So this is some strength there. We've got a long cycle to go till earnings of these guys, right? We've got some time to go. So could they potentially keep running? I'm not going to fight the trend. There's no part of me that you're hearing, hey, Kevin, let's take the other side of this trade, right? Let's get short these guys. That's not one word that I'm saying out there about that. But maybe it seems a trade that could be tired, that maybe I just say, hey, I just kind of have to stay away from for a couple of days from a trading perspective, not an investing perspective, but maybe from that trade side. So that's just for me. I'm not going to tell anybody what to do, but I'm a little, if you look at all the other indexes that we just looked at, this is and we could bang them out, S&P 500, the Qs, the Russell. This is the only one that has really broken out to the upside in this direction. So from a major index point of view. So these are the ones that make me concerned. But Kevin, you're going to tell me they could be the darn leaders of the market, and I'm not going to disagree with that either. I'm not going to disagree.
It's entirely possible, Mike. And so let's not. We're not going to overthink it. We're going to continue to watch the trend and continue to remind us that we need to obviously individually trade to our own accounts, trade to our own comfort. But if we're relying on price action, and you're bullish, you're liking what you're seeing out of the semiconductors, at least today, as we continue this strong uptrend. The number I put on it from the low in early April there was about 89% up with today's move. That is a ridiculously strong move, everyone. 89% from April lows to where we are today. We'll see if we get a breather, but it doesn't seem to be happening at the moment today. Now, Mike, there is one area that I just want to bring up, and I've been talking a little bit about this of late, and that's the Dow theory. The Dow theory breaks differently than the rest of the market, and let's remind ourselves about what Dow theory is. It's just this general concept that Charles Henry Dow created in the late 1800s and into the early 1900s, essentially believing that you could pair the industrial average on the left, the Dow Industrials, with the Dow Jones Transports and get a little clarity on the strength of the market in a long-term standpoint. This is not a trading signal, Mike, but what it might be telling us is that there is a slowing to transportation, which is how we move goods across the country, obviously. And that's what this is all about, Mike. Are we seeing consistency amongst the industrial average with the transports, which can tell us that the health of things moving in concert together could be considered bullish from there? Well, Mike, what I see on this chart are lower highs in the transports while we're making higher highs in the industrials. So we actually have a divergence between this concept. Does this concept, in the eyes of investors and traders, hold any water anymore? It's 150 years old by this time. Is it still valid, and should we be watching it?
Kevin, man, I love it. Listen, you and I used to talk about this all the time. We haven't talked about it in a long time, but I agree with you, right? Like, is it still valid? Now, the way the theory works is the way we move goods across the country, as you just said, is the transports should be air parenthesis leading what's going on in the market. So if you're pointing out a divergence, quote unquote, the transports, according to the theory, Kevin, the transports should be at a high right now if we were at a high. That's where they should, where they should be. But now if we view them historically in Dow theory, the transports are considered the leading indicator. And if the leading indicator is trending down, that does point to the potential for a rockier road. Now, I go to you in the new economy of 2025 is goods and services, the way we transport them across the country. Is that the most important thing right now? Oil prices have been coming down, Kevin, right? They've been coming down. Again, it's cars, it's trucks, it's railroads, right? Those are the transports of the country, right? So maybe we look at the truckers, maybe we look at the airlines. We can, but this is not painting the picture from a Dow theory point of view that the market can continue to sustain going up just from a Dow theory point of view. That nothing else, Kevin, just from a Dow theory point of view.
Yep. And that's perfectly appropriate, Mike. In fact, the one thing I like that we have to quantify it, right? Just from Dow theory standpoint, no concept, no theory is a guarantee to play out the way that that it's theorized. Obviously, I hope that is obvious. But one of the things that we can talk about as well is the change in how our country is managed from a standpoint of business. What do we do these days? Do we build like we did in the early 1900s? No, certainly not a production country. We are a consumption country, meaning we're led by discretionary and things like that, right? Well, it's been said that in this new market, if you will, a lot of traders pay attention to the semiconductors and the S&P 500. Are they making new highs together? And we know that they are. So there's some traders would say, hey, if you're paying attention to what the components or the makeup of the U.S. market is today, it might be more important to watch the S&P and the SOX together. And then those two would be telling you, hey, you're having bullishness across the board. So depending on how you choose to validate this or rely on these concepts, the only real takeaway I want to offer, I think, Mike, is not that one of those traditional Dow theory or something a little new age, neither one could be said to be perfect, obviously, but having an idea of some semblance of confirmation. What gives traders and investors the confidence to stick with what they're seeing? Well, some of these longer, broader trends playing out could be the underlying health that keeps you invested or keeps you invested to a certain level versus, maybe getting a little more defensive in nature. So something else just to keep in mind. We'll probably leave it at that for now. Mike, one of the things that I'm noting here when I pulled up the sector review is we're seeing energy slip quite a bit today. We're off 2%. Now, that might just be the reaction to the breakout. So we could be in the midst of a throwback move here in energy, but that was a pretty healthy pullback as we're speaking right now, 2% down on the day. Had you noticed anything that might be leading what's happening here with energy specifically? I hadn't come across the headline.
I read something earlier this morning. OPEC Plus is going to continue with their increase in supply later on this month. So I did read that. I also, if I'm looking at your chart, while I like the breakout that you've decided that you highlighted right over there on the wedge, I also see a series of lower highs, which I don't like. So if you take that high from last December, the high from April of this year, and the high that you're down. Now, maybe go out in a longer-term chart, Kevin, and maybe take a look. Are we running into a spot where we're not really kind of breaking out there? Now, that's a different. It's a bigger wedge, but it looks like, I don't want to call it a downtrend. Slight downtrend, right? Slight downtrend in a intermediate-term view of energy. Why are we not breaking out to new highs? Increased supply. More production from the U.S. These are things that could potentially weigh, pardon the term, on oil supply out there, right? So when we look at the energy sector, those are things that to put in perspective. But this chart, if you go back to your short-term chart that you had, I think it was like a 1-year chart, it's not the best chart. I'm not going to say it's the best chart, but it's not a horrible chart, right? We're above the 20, we're above the 50, we're above the 200. Short term, the purple line just crossed above the downward sloping 200 day. So the purple line curving up a little bit over there. That makes me slightly optimistic. Sure. But I'll be honest, I don't like the move that it's making today. Again, we're still early in the day, but if this ends up pulling back into this range, coming perhaps by the, closer to the 20 as we get to Friday of this week, if that were the case, then I don't love, from a long-term perspective, the longer-term trend of slightly lower highs. That's the way I would look at it.
Yeah, that makes sense. I mean, we should always, as traders, fall back on some of the basics of technicals, right? You called it out. Depending on your time frame, breakout last week may be a valid breakout in that time frame, maybe not. But the longer term time frame tells us we still have to take out some highs or recent highs to kind of break a short term downtrend as well. So as always, timing of your trade window matters as much, if not more, than anything else, beyond price. Obviously, price mattering most, of course. Now, from a side of things that are rallying or moving today, not a shock that we've got technology kind of leading with semis up a bit today. The other one here that's pretty positive is the communication space getting a nice bounce in terms of the 20-day moving average once again, Mike. Boy, the tests of the 20-day here have been in communications have been great. This is pretty intriguing. Look at that. That goes all the way back to April 23rd once more. So we've had 1 day below it. If you were following a defined confirmation rule, something that says I need, in order to be a seller of a trend or believe that a trend that's working is breaking, I need 1 or 2 or maybe 3 days closing below a major trend moving average like the 20-day. Well, you haven't had any of that. You've had 1 day at best beneath it here a few different times, but very, very limited, Mike. So communications continues to be strong. The one thing we need to point out here, probably, Mike, is that communications, while making a big move here, is really led by about 3 stocks. And that's about it.
And one of the 3 stocks was having a rough week last week, right?
Yeah.
Right. So if you look at it, that one of the 3 stocks was having a rough week last week. So listen, I think from an index perspective, most of these indexes kind of look like what you're just showing me, right? Above the 50, above the 20, above the 200. Maybe a little steeper line than we might like. The slope might be a little steeper.
Yeah.
I was actually looking this morning. I was like, where's there some differentiation in the sectors? When I was looking at, I was looking at XLV, I was looking at XLP. Those are the 2 for me that I seem to be seeing they're lagging, right? Everything else is kind of moving with the market. But if you hit up XLP, XLV, those are the ones that
you're talking about. You're talking about consumer staples, right?
Well,
yeah. So
XLP,
we're talking staples.
The staples.
Yeah.
My apologies, Kevin. Yes. I mean, to change it up on you, but yes, the staples. No, that's good. So the staples coming down, right? That's showing me that the market's not, other guys that me and you aren't talking to, they're not buying the staples either. So the broader market participation is showing me that people aren't, the markets, Mr. Market is not as fearful of a pullback as we might think, because you would expect that these stocks would have a little bit of, hey, there's a lot of uncertainty here, Kevin. Maybe I should stock up on the staples. You're seeing the exact opposite. People are dumping these things, right? So from that perspective, makes me feel better. Whether some of those other sectors are a little steep, XLY, like you were just showing me, if it's a little steep, I do hear it. But which ones are breaking down, right? We've got right now. You've got XLV. You had the staples up there. XLP.
Yep.
But the healthcare is as well. Healthcare as well has been kind of breaking down, right? It's just those are the 2 that are the unhealthy. Pardon the term. Make my own jokes, Kevin. Pardon the term. It looks a little unhealthy as well.
Well, Mike, if you don't make your own, I'm not going to set you up as well as you probably will set yourself up. So I'll let you make your own jokes. But, many of our viewers have been watching the healthcare with me because I've been paying attention to healthcare as well. It's been a little different, right? We still have a downtrend in healthcare. It's pretty obvious. We are sitting on the 50-day moving average here, trying to at least validate a higher low for healthcare. But that communication space has been very, very strong. Some of the entertainment stocks in here have been a little bit intriguing. There's some stocks in the news that we could probably touch on. One of them is Netflix that I just wanted to bring up, because I saw Netflix down a little bit this morning. There was a post by the administration, actually by President Trump himself, stating that he wants to put tariffs on the movie making industry, specifically for those movies that are not made in the United States. And I saw Netflix was down a little bit on that news. You could see a decent tail at support potentially there this morning, based on some of that weakness there, or at least that headline. So kind of an interesting spot for a bounce on Netflix today. There was also a real interesting move, but I got to figure out how this is happening. So, Mike, I saw a downgrade on EA Sports. It's in the game, by the way. If you're a gamer, you know what I'm talking about. So EA, Electronic Arts, maker of many video games, of course. Now, Freedom Capital analysts downgraded EA from buy to hold and put a target at 195. That's up from their 185. But on the day of a downgrade, the stock is popping 5%. If I were an analyst, Mike, I would hate to see that. That would not make me feel very good. My ego would be taking a bit of a hit on such detail here. But they had a fantastic move on Friday there. Do you remember what happened? I was away, so I was not paying any attention to the market these last few days. So if anybody knows, I'd love to hear it. I can find it in my headlines, though. Mike, what are you watching on EA here?
I'll be honest, I didn't pay attention to EA on Friday. I think there was, I can't remember. I saw something on Friday, but it's not my sector of stocks that I play with all day long. But it is funny when an analyst comes out and downgrades a stock that had a huge day on Friday, says whatever the news was overrun, and then it comes up and it's up another 5%. that's like me putting a sell on the market and it just keeps going up every 5 seconds, right? So
Yep.
I understand that. I understand the joke. But at the end of the day, listen, that's what when we talk about flag patterns, right? And we always look
Yep.
for that pole. We want a pole that looks like that. the one that just happened, not even that, but even the one that happened on Friday, right? Like that's a flag breaking out. That's a a parabolic move straight up, right? That's a big move up. Look at the volume that came in on Friday. So whether you and I follow that chart left and right, from a technical analyst point of view, if you see a breakout and you see it on that kind of volume, those are the things as a trader that you kind of follow with the momentum, right? That doesn't mean it's a buy and hold, but that's a quick momentum trade from a trading perspective. I kind of like patterns that look like that, where they have strong volume straight up. Some people will say it's slightly parabolic, and that's why you had, even it's a red candle today, it's still up 9 points. Right? Maybe it was up 11, Kevin. That's why it's red, right? It opened up 11 and now it's only up 9. That's why it's a red candle. But nice move, strong sector in the market. That is for sure, right? The gaming sector.
And you can see from our participants here, they're all giving us the detail. They're going private. So EA is going private, that is, and that's why we've seen such a significant pop here. Trading up to the at least the vicinity of the offering. It looks like a $173 price target from after the Wall Street Journal reporting the company is in advanced talks to go private, around $50 billion in total. So a lot of traders might be taking their opportunities given the move we've seen here, and you could understand it, Mike, once you see a move like that to upper levels. A lot of traders just look at those opportunities and say, thank you, we'll go ahead and take our trade now, cover, move on, not stick around for it. The likelihood is the majority of the upside may have already been accomplished. So not uncommon there to see that kind of a little bit of a pullback after an excellent open. One of the things that might be leading as we get to our last headline of the day, there's an upgrade this morning on Lam Research out of Deutsche Bank. And another chart, Mike, that you'd be hard-pressed to call anything other than bullish. My 20-day moving average appears to be way too slow. Notice we've got this really nice gap level that has been tested a couple of times. And I bet if I shift to the 10-day moving average, we'll see that there you go. Maybe some traders can utilize the 10-day as a method for managing risk going forward, Mike.
Yeah, listen, when we were just talking about a parabolic move up, right?
Yeah.
a straight vertical move up. Yeah, so maybe the 10-day for an active trader becomes more of the signal line, because the 20-day is going to be too slow from a day trader perspective, that something has moved, I'll say, parabolically straight up. So from a risk management perspective, I'd use that 10-day. Because as you just showed 3 seconds ago, the 20-day was too far away to use that as an indicator. What else you got out there, Kevin?
That's pretty much it. I mean, there was one more that was upgraded and actually got a buy. Let's just throw this out there at least. General Dynamics, GD. So you've got a stock here that's been in a bit of an uptrend working against its 20-day moving average as well. And you've had a breakout move. As usual, Mike, one of the things traders will do is just validate their time frames. And I'll tell you what, you've got a wonderful uptrend that's been working with the 100-week moving average, but having moved through resistance, we talk all the time about why traders consider buying breakouts, Mike. This is yet again evidence as to why traders consider buying breakouts, right?
Well, exactly. If you just use that picture that you have right there, think about the S&P 500, think about the Russell 2000, think about the Qs. You drew pretty much that picture, except for everything above your green line on the right. Those pictures, we're at those levels on all these things. So that's the kind of move that you want to see. You see a move like that in General Dynamics, a chart pattern. I'm not buying General Dynamics. I'm talking about the chart pattern itself. That chart pattern leads to a bullish kind of move. So that's a cool pattern out there. We'd like to see it maybe in the bigger indexes of the market itself, right? You know what I mean,
Sure.
Kevin? That the indexes are sitting at those levels. That's what we were talking about the Russell 2000. Last thing I did want to say, Kevin, because I know you're going to be up against time, take a look at gold, right? Continuing on new highs. So as we talk about the market making new highs, why is gold making new highs? Kevin, tell me.
If you're looking for, I would say fear factor to a certain extent and concern as it relates to the broader indices. Gold continue. You could take the look at this as just a view of a little bit of that fear factor, so to speak. Investors who are maybe uncomfortable with the fall of the dollar are possibly buying into some gold viewpoint here. And you should also point out that the dollar has been on a full retreat mode for some time. So the dollar falling and gold rising, that is a relationship we see all the time in the market historically. So there's probably some of that going on, as well as the overall concerns about interest rates and so forth, Mike. I think you continue to see some validation of those moves in precious metals, both gold, silver as well. So maybe from a standpoint of just evaluating relationships, it can make sense to keep an eye on precious metals at the same time. So good reminder, Mike. And as always, a great conversation. Love having you back. Thanks for being here. We'll have you back next month, I hope, as we continue into what will be Q4 starting this week, everyone. I can't believe it, but I want to thank you all for being here. Don't forget about the survey that's in the chat. We'd love to hear from you there. Big thanks to Michael Fairborn in the chat as well. So follow Mike and me on X. And if you like the conversation today, hit that thumbs up button for us as well. That'll help us out as we get this reviewed and into the archive for you all. So hope you all have a fantastic Monday, everybody. Thanks again for joining. We look forward to catching up with you all again real soon.